Hi everyone, I'm Andy Butts, New Homes and Investments Director here at Centrick, and welcome to Centrick Invest's first ever podcast episode. Today we're going to deep dive into Digbeth, one of Birmingham's most talked about regeneration hotspots, and unpack really what makes that an investment play in today's market. Joining me today are Siôn, Bennett and John Treacy, expat investment directors. Welcome both of you. And thanks for joining. Do you want to maybe just give us a rundown of what you guys have been up to, your experience, that kind of stuff?
Yeah, sure. So thanks for the introduction, Andy. My name's Siôn Bennett. I've been based in Hong Kong for 6 years now. Of course, we sell property all around the UK. However, Birmingham has been one of our top hotspots. Whilst I might not be from Birmingham, like some of my colleagues here, I know the market extremely well. I've had lots of clients be very happy and successful with their properties there.
John Treacy. I'm originally born nearby Birmingham, Wolverhampton, but actually been in Hong Kong for just touching on 18 years now. I've worked with some of the biggest developers in Birmingham over the last 7 to 10 years. Experienced a lot of the pros, cons of the market there, and it's an exciting market for sure. So looking forward to getting stuck into this today.
Brilliant, thanks both. So what we're going to cover today is a few high-level topics. I'm going to talk about why Digbeth's regeneration isn't just all hype. We're going to talk about and unpack really who is living there, who are the tenants, who are the owner-occupiers, what's the market doing. We're going to talk about the expected returns you can expect to see over the next 5 to 10 years. We're going to talk there about rental and capital growth, and we'll also give you some early access into a development that we've been running in Digbeth recently, and that we think makes an excellent investment. First, I think what we should address really is the whole buy-to-let market. Obviously, buy-to-let's had some bad press over the last couple of years, I would say, with interest rates increasing, legislation and costs to landlords going up. Siôn, if maybe we start with you. What are your thoughts on buy-to-let, and why should people still think about having property in their investment portfolio?
Yeah, sure. So, you touched on it there. I think any sensible person or wealth manager would say, you don't all your eggs in one basket. Of course, property forms a part of a wider kind of portfolio. But I do think there are huge merits. Having something physical that someone can touch as an investment is a huge point. If there's World War III tomorrow, which you never know at the moment. But if there's World War III, people still need somewhere to live, right? They're still going to need somewhere to live, and it's a very long-term asset. In that sense, also the fact that you can do leverage. Now, of course, that's a mortgage. You can call it a mortgage, but also there's not many investments where you only need to put down 25% of the property price, but you're benefiting from the full 100% as well. So that leverage forms a big part of it. And I do also think, you said about legislations. Of course, there's a lot of talk about the kind of Rental Reform Act and things at the moment. I have a property in Wales and from Wales, and they've had rental reforms and regulations for over a year now, and it hasn't had any to little impact. What it has done is it's kind of sifting out some of the bad landlords, and ultimately it's going to make it more of a professional market, which I don't think is necessarily a bad thing.
Yeah. Brilliant. John, any views from yourself?
Yeah, I think obviously from an expat angle, where a lot of our experiences is for people who say in Hong Kong, Singapore, Dubai, you don't have a pension provision like you do a lot of the time in the UK with employers. So you do have to get your money to go to work. And especially if you're leaving it a bit later on, property is probably the quickest way to accelerate that. So you get 2 or 3 properties, you can get there quite quickly, as opposed to saving that in 10 years would be very hard. I think also we look at the research, and the research is quite interesting timing. Savills just this week have just released updated price increases, and they have been increased. Quite slow for this year, but from next year onwards, it's very, very strong. So I think it's probably a good time to get into, especially something a bit off plan. Yeah, we'll touch on those numbers a bit later on, but I think it's part of a holistic approach. Don't put everything into property. I've got some clients who've got a lot of property, but perhaps part of a balanced portfolio, this still absolutely does work.
Yeah, absolutely. I agree. And I think, property isn't a get rich quick scheme. And I think people have got to think in 5-year stints, haven't they, 5 to 10 years. And like you say, pension planning is the perfect opportunity to think about property. Okay, great. So what, maybe John, you can take this one first, being a local lad, but what makes Digbeth distinct from other Birmingham locations, and why are we seeing it as quite a big investment hotspot right now?
Yeah, I think it's just it's purely location and what's happening around that location. It is, as parts of Digbeth are literally a 5-minute walk from the Bullring, and you're equidistant to two of the biggest infrastructure projects in the UK, which we're going to come on to, Birmingham Smithfield and HS2. HS2 is once in 100 years infrastructure project, and Smithfield is equally once in a lifetime sort of thing. So to be piggybacking on infrastructure is what we always say, and these are two of the biggest projects in the UK. So Digbeth is right smack bang in the middle of the city centre. Your 5-minute, 10-minute walk to shops, and your price is still very affordable apart from other parts of the city. So say somewhere like Drury Quarter, where something prime there might be 300,000 for a one-bed plus, you're looking at something around the 200k to 230k marks. If the prices are right and the story for growth is extremely strong, to say the least.
Brilliant. Siôn, not being from Birmingham, what are your thoughts? I know you've had some good experience with other developments that you've sold in the past that perform well.
I think Digbeth, Birmingham is obviously a bit more of an industrial kind of traditionally. I know back in the day, a bit more an industrial city, but I think Digbeth specifically, something I like about it was quite industrial. And so there's a lot of kind of warehouses and things. And I say that in a positive way because a lot of these are being converted into beautiful commercial buildings, apartment buildings. So it's got quite a kind of, it's now become a bit of a residential area and hub for the city. Obviously where other areas they have kind of big office buildings and things. Here it's become a bit more of a residential, but quite a cool hip area. You've got bars, restaurants. You've got, when I was there recently, I went to somewhere called Red Box, I think it was called. We had like independent clothing companies and like a warehouse and stuff. So that's what I like about it. It's becoming that kind of hip, edgy residential area.
Yeah, there's definitely a great vibe around there. I think with the custard factory and the kind, it's very, very much a young entrepreneurial spirit, isn't it? Along with some great kind of leisure and retail options. Yeah, I think tenant demand is picking up there. People want to be around Digbeth, particularly the younger end of the market, I would say, which we'll probably touch on in a second. So that kind of segues quite nicely into who is renting in Digbeth right now and what's making them want to move there and what's kind of retaining them there.
Yeah, I think interestingly, we sell stuff all around Birmingham, inside the city centre and outside. The prices, as John touched on earlier, and say you go to somewhere like the Jewellery Quarter, for example, is a lot more expensive to buy. But interestingly, when you look at the rents, there's actually not that much of a difference, which to me shows there's a big rental demand in Digbeth. Most of that is young professionals. That's usually who we target anyways as tenants. Of course, the average age in the UK to buy a property is going up. So, more people having to rent, but also want to rent as well. So young professionals, people moving to Birmingham city centre. You do get some kind of students and international students, but it's mainly that kind of young professionals, or someone who's got a job in finance, a job in law. You've got the tram station now, you've got buses, and that's the kind of rental tenant, the stereotypical rental tenant that we're seeing.
Yeah, John, what are you seeing in terms of tenants?
Yeah, so similar to Siôn, Birmingham is one of the youngest cities in Europe by age demographic. So you got that young professional, you're thinking like HSBC, Deutsche Bank, these big firms. People can walk to work, but then you've got that creative quarter, which is getting bigger in Digbeth. So a bit of both. As I touched on before, what you've got on your doorstep, you've got all those amenities, and the plans for those amenities to grow. So proximity to work and play basically is why it's attractive, and the rentals are the same. Like we've done a lot of units in apartments in J Quarter, or JQ as a lot of people know it as, and the rents are exactly the same, but they're much cheaper. So to double down, I think it really means that the rental demand is very strong in Digbeth for sure.
Yeah, definitely. And I think there's a lot of talk in the market at the moment about sort of creating 10, 15-minute cities, isn't there, where everything's on your doorstep, from your job to, your shopping and your retail, and also your leisure and your evenings and stuff. I think Digbeth's got all that in abundance, and there's more coming through the pipeline as we're aware. So yeah, definitely is forming that kind of 10, 15-minute city centre. Okay, great. So obviously Digbeth's being spun around as definitely a regeneration area. Shall we talk about kind of what's real in that, what's coming through, what's already being built? Because you can talk about prospective projects, but they might never come out of the ground. What's funded, what's underway, what are we expecting to see over the next maybe 12 to 24 months, do you think, in terms of new projects?
So, John's already touched on it earlier, but these things are going to benefit, these two specific things, being the Smithfield market regeneration and HS2, are going to benefit Birmingham as a whole. So, when we're pitching Birmingham, we talk about it, but What's huge is they are in Digbeth and they're in and around Digbeth, right? So it's going to have a huge benefactor. Smithfield Market is, I think it's about 1.9 billion, which is going to be commercial buildings, residential buildings, it's going to be coffee shops, offices, everything is going to be a huge lifestyle area. And that's where the old Birmingham Market was. And they've moved that Birmingham Market out of the city centre. And then to add on to that, the HS2, which again is just going to completely regenerate the Midlands as a whole. It's probably the largest infrastructure investment, like John said, that's been for generations. And that is, again, in Digbeth or right next to Digbeth. So it's going to have a massive impact. You'll then, of course, there's things recently about the delays and stuff, and it's probably going to be looking at knowing the UK timelines. You're probably going to be looking at between 2033 and 2035. But once that completes, it'll be a complete game changer. You'll be able to go from Digbeth into London, to central London, London Euston, in 45 minutes. And you can see people commuting 1 or 2 days a week between the two cities. So they're confirmed, they're underway. When you go there, you can see those things are happening. You've got the custard factory you mentioned, which is already quite a cool area, but I think that's got about a £10 million regeneration going into it as well, which will include the Typhoon Tea Factory, which is obviously where the BBC Midlands are moving their offices. I think they're filming MasterChef there as well, right? Yeah. Some other bits. It's definitely, again, I'm always kind of joke about it. It's definitely a little bit rough on the edges, I think, Digbeth. But that's, when you're looking at investment, they're the kind of areas you want to be going into, right, where there is that huge regeneration and on all that potential for growth.
Sean, John, any further comments on that?
Yeah, so more on the housing side, there's plans for 6,000 new homes in Digbeth alone. So, I think it's all about timing as well. So that's all confirmed and with planning permission. I think getting into something where you're not waiting for 5-10 years for something to be built, and you're waiting, say, 6 to 12 months maximum to get into a project makes a lot of sense. Those MasterChef, those sort of TV creatives are going to just keep, it's like once one goes in, others may follow. So I think it's just about timing. I think in 5-10 years' time, you think, look back and go, wow, that there really were good prices then, because once these things actually happen, like HS2, and we actually can do that commute, then prices just kick on. So I think it's just about picking your time and getting into the market. It's still a very early time in the process for what's due to expand.
Yeah, definitely. I've worked in Birmingham and obviously seen Digbeth now for well over a decade. And, from what it was then to what it is now, it's huge. And all I ever hear people is, I wish I'd have bought then. I wish I'd have bought when we talked about that project 10 years ago. And it's going to be the same in 10 years, isn't it? All this infrastructure is going to come to life. All this investment's already happening. So that phrase in the property world of don't wait to buy property and wait has never been more true. So yeah, a lot happening in Digbeth for sure. Okay, brilliant. In terms of then capital growth and rental growth, what are we expecting to see over, let's say, the next 5 to 10 years? What are the forecasts around, I suppose, Birmingham and then drilling down into Digbeth? John, do you want to look at maybe the capital growth?
Yeah, sure. So like Savills have just upgraded their report for the next 5 years. You're looking at for Birmingham around 23-24% of growth for the next 5 years, which is outperforming a lot of the market in regards to the UK. Then you're going to have obviously that's the West Midlands, and then Birmingham obviously is the main part of the West Midlands for growth, being the big city. I'm from originally Wolverhampton, which is 10 minutes away, and there's no way there's growth happening in Wolverhampton as much as Birmingham. Birmingham is the nucleus of this growth because of these huge infrastructure projects. I would suggest if West Midlands is 23-24%, then I think Birmingham should be more like 30% over the next 5 years in the right project if you're getting in at the right prices.
Definitely. And I think, just referring back to what I said about selling property, and I think, John, you were probably selling some of the same projects as me way back when, but they've actually doubled in value since we were selling them 10 years ago, haven't they? So, we were selling one beds there for early 100,000, 110, 120 grand.
Lowest price one bed, I think, in Digbeth. It was only 390 square foot. It wasn't a huge unit, but apartment size. But yeah, they're as low as that. But anything starts with a 200 now on a one bed, and pretty much in a city centre, let alone Digbeth, anything starts really from 300 for a 2-bedroom. So if you can get in below that price point, which we'll touch on with Emerald, you can. It definitely gives a green light to a lot of investors.
Yeah, definitely. And I think that, those prices have doubled in a market where, that the planning system and the infrastructure probably hasn't moved as quickly as it is now. So, yeah, HS2 was 25 years away back then. So yeah, it's really good signs to look back and see where the growth's happened already. So good signs of things to come, hopefully. Siôn, maybe do you want to touch on the kind of rental expectations, rental growth, that kind of stuff?
Yeah, sure. So the average rent you'd be expecting in Digbeth specifically is probably between 5% and 5.5%. Net, that's what we'd be going for. I mean, the average, for context, the average yield across the UK, it depends on who you read, but it's like between 4 and 4.5% net. So that is above the UK average. In terms of kind of growth and forecast to forecast, but they expect rents to grow just under 20%, 19.9% over the next 4 or 5 years, just to the end of 4.5 years now, halfway through 2025. And I guess touching on what we said about why property right at the start, that is something that's kind of worth mentioning as well, is that you do have two forms of income with property. You have the kind of price growth and the rental income. I'm always kind of careful when I talk about it, I guess, because, prices are going up in the UK, which is tough when you're living in the UK in terms of rents and stuff. But as a landlord, of course, it's a good thing. It's a very good kind of hedge against inflation, especially when you have those two forms of growth, right? You have the rental income, which rents very rarely go down. You either stay flat or go up. Then you have the property prices growth as well. So
yeah, it's definitely what makes property as an investment class different, isn't it? Where you can get monthly income from it. Stocks and shares, you can't really do that. It might grow in value, but you can't draw an income or a wage off it. So yeah, it's really quite unique. Okay, great. So some good signs on both capital growth and rental demand. I think it's worth noting as well that the properties are never empty for long in and around Birmingham and Digbeth. The tenant demand is super high. So generally tenants, you're minimizing your void periods. Absolutely. So in today's market then, what are the things that investors should be wary of or look out for? Obviously there's some kind of definite advice I think we could give here as things to look out for, things to be aware of. That might be areas, it might be particular deposit schemes. Siôn, is there anything, top 1 or 2 tips you would give to investors in today's market?
I think, perhaps it's because we've just been talking about rent, and so it's kind of top of mind. But I really do think, especially more recently, that a good rental agent is imperative to a good kind of investment. More increasingly recently, we have people kind of complaining about maybe tenants or rental agents and things. And what you're noticing a lot of the time, and people do learn their lesson pretty quickly, but sometimes people go for the cheapest rental agent. They'll go for the cheapest rate, but cheapest isn't always best. The idea of a rental agent, especially when you're an overseas landlord, is that they do the whole process for you. It's completely hands off. Whereas, sometimes we get a cheap rental agent, they're basically just relaying messages to you and you're basically looking after it yourself, right? You're paying them for it. And so I think choosing a good rental agent is key. And again, I'm not saying the most expensive is best, but I'm just saying the cheapest isn't always best. The second thing I think is, do your own research on developers, I think, as well, is a big thing. We have always have had a huge emphasis on kind of the due diligence process, especially when things are off plan. It's important. Does it have, all of our things have to have deposit protection in place? If you're buying off plan, they have to be fully funded, so they're not using your money towards the build of the property. These kind of things as well. So working with a good developer and I suppose a good partner like ourselves helps with that as well, is another.
Yeah, definitely. Was it buy cheap, buy twice?
Yeah.
In all industries at the moment, right? I think service levels have probably dropped over the last 5 years, and experience levels within the property industry as well. So I think vet your agent, make sure they've got relevant experience, get some references. And I think generally you follow your gut with that. The gut feel for most of these people is generally right. So yeah, I think that's really good advice, Siôn. John, what have you got?
Yeah, I think the actual deposit on the actual project itself. I mean, in the UK, you can go up to 25-30% on exchange as a deposit, and Emerald Court clients can get in for 10% on exchange. So I think that is good. You don't want to put too much money down that's not working for you. It's only working for you upon completion, right? So that's a big thing. So all the projects that we tend to work on at the moment are between 10 and just a couple at 20%. So Emerald Court at 10% is attractive on that basis. So there has been a lot of projects in the UK I've seen marketed with huge paper, fantastic facilities. That's great if you're going to live in it. I've lived in these sort of places in Asia where you've got swimming pools and stuff like that, and it's amazing. As a as a landlord, these things cost a lot of money, and service charges can be expensive, which can eat into your yield. So given Digbeth is such a good location and there are gyms and things like that very nearby to all these kind of places, then I think getting something with a pretty low service charge is really important. So which means that the yield you get is your yield, or more of it is your yield, as opposed to it being eaten up by a chunky service charge.
Yeah, good advice. And John, is it worth just jumping into there about deposit protection and stuff? Because I know there's some developments that might be asking for 20 and 25%, which none of it is protected. So it's quite high risk. Is it worth kind of breaking that down for people now, just so they understand what to look out for?
Yeah, so look, there's been some horror stories over the years. I remember a scheme in Manchester back in the day where it was sold in Hong Kong and people were paying 50%. They were promised like it would receive interest, and the project failed. Anything over 20% for us is probably a red flag where we'd have to have like complete comfort and where the money's really protected, and that's not the case. So I think having deposit protection in place is important. Having a checkmate or equivalent guarantee is important, and these are things that we work with our solicitors, our approved panel, to help clients be protected and make their money work for them. I think anything over 20% right now is a no-go for me in the market, unless someone can say there's a valid reason why they need to do it, because most developers aren't doing that.
Yeah, definitely. And I think, like Siôn alluded to, making sure the agent that you're going to buy from has done the relevant due diligence. We run a 50/60 point due diligence checklist, and it's worth asking to see some of that. I think you both have touched on it, kind of funding, professional team, planning applications. Some people are selling stuff that haven't actually got the formal sign off and discharge conditions on planning. I've seen, again, look out for those horror stories, but yeah, speak to the agent, check on what due diligence they've done. And also, things like long stop dates in the contract, stuff like that. So there's a lot to go into, but yeah, ask to see maybe the due diligence report would be a really good place to start. Okay, so we've talked about the market, we've talked about Digbeth. Should we talk about Emerald Court itself? Obviously, it's a development that we've been selling to some of our investors. John, what do you think is creating the buzz around Emerald Court at the moment, and why some of our investors have been keen to get on board with that development?
I think, first of all, location is perfect. We all were involved in a previous scheme, which is just about 300 metres away, which has got a really good track record of rentals, and lots of happy clients, repeat buyers from that project. So the location is perfect. It's not a huge scheme. It's only 31 apartments in total. So I think that's perfect for a couple of reasons. There's not a huge amount of competition for rentals when it comes to market, and also the service charge will be maintained at a low level. So I think those are two major things, because good investment is only a good investment if it's rented out and you're actually making money, right? So the price point is the main thing. The 2 beds are extremely well priced, being under 300k, which, as I mentioned previously, I think anything under 300k in city centre is a buy. And the 1 beds are extremely well sized. So you've got 1 beds from £239,000, so 239k, and they're over 550 square feet. So very, I talked about that project in Digbeth previously, which is 390 square foot, which is great crash pad sort of thing. But for actual people who want to live, work and play, they want a nice size apartment, 550 square foot is a really good size. And just 10% down on 239 is just £23,000. So I think the nuts and bolts of it make a lot of sense. So yeah, that's the sort of summary for me.
Yeah, Siôn, what do you like about Emerald at the moment?
I think John's pretty much smashed it there, isn't he? I think he's taken all my points. The only thing you did miss out is that, especially the 1 bed, some of them are facing the park, which are really nice. There's one on the first floor at the moment. The other thing again as well, actually, he didn't mention, is the fact that, which is something I really like, is that the developer is retaining, I think, 11 units, or 9 or 11 apartments. And so to me, that gives a very good kind of vote of confidence. He believes in it. He's in it for the long term, and that shows the kind of strength of the investment case.
Yeah, it's quite rare, isn't it, to see that? So yeah, I do agree with that, Siôn. Okay, and in terms of the deal structure then, I suppose, what point are we at in the journey? How can people get involved? What do they need to understand about how the off-plan purchase structure works? Siôn, so John doesn't steal your thunder, do you want to take some of that?
Yeah, sure. So there's 29 apartments, and the developer's holding on to 11. So that leaves 18 apartments. We've sold, I believe, 12 at the moment. So we've got 7 or 8 left. John said we've actually got one or two beds just under 300k, which is very much unheard of in Birmingham city centre at the moment. And then there's some one beds between like 229 and 245, I believe. There's a few different deposit structures when you go into it, but what most people are doing is putting 10% down. So basically, you reserve today with £2,000, goes into the solicitors, your solicitor and the seller's solicitor do a bit of back and forth, and after about a month, the client basically pays 10% deposit minus the £2,000. So you only need what's that, £24,000 to get into it. Of course, you'll need some more money later on. That's a very low deposit structure to get in, especially for people who get bonuses, gratuity bonuses, teachers, things like that overseas. And then you won't need anything until completion. So current completion is probably end of Q1, early Q2 2026. So let's say you paid 10%, you have 90% remaining. You're going to use a mortgage to fund the majority of that 90%, say 75-80% of that mortgage. You're going to need another kind of 10-15% deposit when you get to completion. So it's quite nice. It breaks up the payment cycle, especially when, probably slower than what people expected, but everyone is expecting interest rates to continue to drop as well. So you're locking in the price now. However, you get you're hopefully getting a lower interest rate in 6-9 months time.
Good. John, anything to add to the kind of structure of the deal, or what potential investors might want to know or need to know?
Yeah. Well, the good thing is it's not like construction is well underway now. So the steel frame is just going up, which is good news. So that's where you can you feel what it's going to look like to an extent. So that's all in place. The construction has taken place without having to wait for sales, where some projects they have to sell all of it or most of it before they sort of start to build. Construction is well underway, and we can actually provide construction photos and videos to clients who want to look at this further.
But yeah, the steel frames are going up. We were there yesterday actually and got some fresh images of that. So it's really good. You can start to see what the kind of mega structure looks like. It's a great stage to kind of see it through the journey. I think, I don't know if you mentioned, Siôn, but we're expecting it's kind of Q1 probably 2026 next year. So there's a fair bit of time to kind of get the legals done, get the mortgage application approved for, which we'd probably look at 6 months out from completion for mortgage application. So you're looking at that in Q4 of this year, and then you'd line up rental agencies, furniture providers, all that kind of stuff, wouldn't you, before well in advance, so that there's no downtime after completion. You want your furniture in there pretty much on day one, and you want your letting agent pretty much picking up the keys and doing viewings on it on day one. So yeah, I think getting all that in order in process, planning that so there's no downtime in between completion, because once you've paid all your money, you want to be returning on it as soon as possible. Yeah, again, speaking to your agent, making sure that they've got the furniture provider lined up, that they're possibly marketing it a few days before completion just to start getting some interest, and we can get a tenant lined up as soon as possible, so it's returning for you almost immediately. Okay, guys, thanks for that. Anything else you guys wanted to add?
No, it's good.
Thoughts? Okay, well, thanks for your time today, guys. Been great, and look forward to hearing from you soon.